Okay, quick Tuesday morning radar update. So we've opened with a little bit of a pop in the UK and a little bit range bound since the open. Waiting for a little bit of guidance from the US maybe, but we've traded some. We're trading some swing days there. We'll just look at the US. You know, the US. Yes, we had a gap. We've closed the gap. Extremely strong risk on day in the US. Now, if you go through the GTRS in the chat for the US, you will notice it's loaded with swing bars in there. So haven't seen that many in a long time. So it makes the case that maybe, you know, they're ready to move some of these, but, you know, doesn't mean it will stick. Obviously, you know, they haven't been able to fix my crystal ball yet, but they're working on it. So we'll just have a quick jump through the markets, and we'll start with just the Nasdaq comp. This thing's a work of art. It's almost too good to be true. I know people will be shouting triple top, as they always shout triple top on every time just before any double top breaks out, because they always shout double top as well, don't they? At some point, you know, they will pick the top in the market. But, you know, many people have gone broke picking tops in this market, as they always do in every bull market. They shout louder the more money they have on the sidelines. So, you know, I'll just keep it simple. You know, the most bullish pattern in the market is seeing a double top for me. I trade towards them consistently all day, every day. You know, for my career, sitting in front of the screens, I want to see double tops because I will trade towards that double top consistently. You know, the most bullish pattern there is in the market. It always breaks to the upside. Not always, but, you know, predominantly breaks to the upside. So, moving on from that, let's just go through the other markets. So we've got a swing bar. Transports has been digesting this. You know, it had a solid, it's a huge move. 50%, 30%, what is it? 30% move in the transports there. Huge move. Digestion. Very normal through time or price. It's going the price route, channely price action. The Dow is doing the same thing. You know, it's had a pretty huge move off this last pullback. That's the last correction we've had in the Dow. Do you count these as corrections? I don't, you know, not really. 30% move. Just to pull back into mean trend. S&P, you know, same, you know, this was the double top. Trade towards that all day long. You know, big move. You know, 30% moves have to consolidate. Do they have to break down? Well, they could do, but, you know, they don't have to. Nasdaq 100 closed through the highs last Thursday. Dip back in on Friday on an inside day. We're still trading inside that green bar. So this big green bar, we're still trading inside it. We'll see how that wants to play out. And the Russell. Let's just go through the Russell. 50% plus move. 50% move from there in the Russell. Huge move. And this is why the Russell has been consolidating. Markets consolidate through time or price, you know, and it's going the time route. Now, the time route is stronger than the price route, but it doesn't mean it can't drop off a cliff, and it really doesn't mean it can't do that. You know, obviously we don't have a crystal ball. Well, we do. We have a broken one, but but yeah, we've got a swing bar in there, high volume swing point. You know, all that negativity on the prior day has just been knocked out of the water. Doesn't mean it will hold. You know, nobody knows where price is going. All I know is that this is going to happen. You know, get digestion, pullbacks will happen on the primary trend. I make money by just riding trends. Focus on the stocks. The markets are in okay shape. It's hard to be bearish on markets what are trading, you know, respectable levels. You know, as it was here or here or here or here or here or here. You know, it's hard to be, you know, moving on. FTSE 100, not the best market to watch. FTSE 250, just first sort of consolidating at all-time highs in the history of the world. You know, still just doing its thing. And the small caps. And the 350s there as well, for those who like that. Then we'll just jump over into the dollar. Not like that, we won't. Treasuries, little pop on the treasuries, dip back in yesterday. Let's just go and have a look at the dollar bull and UUP. So, interest rates, shortages in commodities, you know, dollar balled up. Come on. It's all stuff you cannot control. Everyone's throwing out these, so, you know, the news just loves this sort of stuff. But at the end of the day, the dollar is going to the moon. That was the news day on that. Now, the dollar's, you know, trading that level again yesterday. So, hang on a minute, what happened? You know, what happened to that trip to the moon we were taking? You know, the typical news. So let's just, you know, what's the dollar doing? Well, it's in a primary downtrend at the moment. How does that affect commodities? Well, you know, pops in the dollar is going to show, you know, you're going to see the opposite in the commodities. So we can sort of go and look at, you know, pops in the dollar, pullbacks in the sort of, this is a good one to look at, the metals and mining. Pretty normal action. Yes, at some point it could come deeper. It is what it is, whatever. But, you know, at the moment, you know, it's still totally intact. It's rising over every time frame I would look to follow. And, you know, I'm not going to argue with that. I'm just going to let my, you know, these opinions on why things should go up and go down, these big picture sort of, you know, usually they're basically a load of horse shit, is basically, excuse my French. You know, silver is the classic, shortage of silver, you know, that one gets rolled out every year or so. And it's just basically, you know, it usually arrives after the move anyway. It has absolutely no sort of correlation with what the actual silver stocks are doing. It never does. When silver bounces, you know, they smash it back down again. You know, occasionally it'll make a move. No one will believe it. At the end of the day, you know, I'm trading the stocks, not the commodity prices. The commodity price just acts as, you know, it just increases the volatility of these things. Do you really believe there's shortages in some of these metals, you know, and there isn't any stockpiling of these things? Really? You know, do you believe that, you know, the silver price was up, so your stock, bounced on the silver price and then is trading the lows again, should go back up just because of the silver price is trading it differently? Really? I wish it worked like that. It doesn't. It never has. It never will. At the end of the day, the only thing you can control is where you get on board, how you manage that trade, and you can respect that the, you know, other factors are going to knock a little bit of noise into those trends. And if you're too close to the sun, you're going to get your fingers burnt. You know, it's a balance between being close enough to the sun to make some money and not get knocked out of the trade, and being too close to the sun that you just keep, you know, it's death by 1,000 cuts. So the way I do it, I accept the volatility and I buy more of something what's working, and I retain a wider bracket to it. You know, if it lets me add, it's working. It doesn't mean it won't roll over either. So, you know, the timing of these correlations and everything are usually totally at the wrong end of the trade. We'll just talk about that. You know, they got bullish on Bitcoin up here. We were bullish on it here and here and this breakout. And this was the end of the trade. Now it needs to sort itself out again. We can say that on TLT as well. You know, this big pop in TLT was where, you know, we were stuck with this, you know, and then what does it do? It just sorts itself out again. So you have to get into the zone where you're trading the right hand edge and not trading rear view news, because all news, what's actually factual in the markets, is basically, you know, it's in the rear view mirror. You know, you can't, you know, the right hand edge is an unknown area where you just have to sort of ride. So it's like getting in a car and you don't know how much fuel's in the tank, and you pick the vehicle in the lot. You go, right, we've got to pick one of these. We're going to try and get the longest journey out of one of these cars, but you have no clue how much fuel's in the tank of these things. All you can do is, you know, get on board and stay with the ones that work. It really is. That's how money is made in the markets, if you have the price appreciation anyway. And yeah, that's my 2 penneth on that today. So let's just quickly have a look at the pound dollar as well. You know, base in action, normal action, had a straight line move. So if you reverse up the YouTube videos and go and look at where we were looking at this as an area of interest, you know, it broke out of this base, it bumped into this bigger level. First pullback would be a bit of a cheat there, and then off it went on its journey. Pulled back, first pullback, off it went on its journey again. And now it's in the right side of a potential base. Doesn't mean it will hold. It really doesn't. At some point all trends end, as this one did, you know, but you can see the same process there. Area of resistance, psychological resistance, with it being a currency. You know, breakout, first retrace, breakout, first retrace, breakout, first retrace, and then it went on an almighty run up into this area. So, you know, price action should always be, you know, it's real. Price action is real. You know, try not to fight with that. Don't let news get in your head, and a little earworm gets in your head telling you that there's a reason that what you see in the right hand edge is wrong. You know, that's my sort of 2 penneth today on that. Okay,